Right, Sonal, thanks a lot for that bullish numbers and bullish commentary from across the board for all real estate players. So let's continue this discussion with Anuj Puri, who's the chairman at Anarock Property Consultants. Anuj, you've heard Sonal, you've seen the way the numbers have come by, you've seen the way the street has reacted to those numbers as well. I just wanted to understand that how much more of an upcycle are we seeing in this real estate cycle right now? How much is left? And secondly, the next 1 year or so, what are your estimates will be the volume growth and the value growth? How does that pan out?
So Mangalam, very good afternoon to you. And I thought that the report was beautifully put up by Sonal. The market continues to pleasantly surprise us. I think there are two questions that you've asked. One is that how long this will continue, the growth that we are seeing. So in my thought, Mangalam, this is a 5 to 7 year cycle. So we are perhaps in the 1.5 to 2 years of that cycle. For the next 3 to 5 years, it does look like, pretty good if we consider that it is going to be a 5 to 7 year cycle. There are 2 or 3 things that can, disrupt, if something was to go wrong in the Indian economy, but doesn't look like in there, or, if the repo rates were to increase, then it can hurt the demand. Clearly, it looks like that is coming to a halt as well. So I do feel is that next to 3 to 5 years, you will continue to see growth coming in. This is largely going to be in MMR, which is now really by value terms, 50% of India's total sale. When you look at the top 8 cities, followed by NCR, followed by Bangalore. And that's why, the numbers which Sonal said of the listed companies are largely based out of these 3 geographies and doing exceptionally well.
All right. Anuj, hi, good afternoon, and thanks for joining in. So you spoke about the geographies, right? Tell us in terms of pockets, what are you seeing? Is the affordable housing segment picking up in any way? Because I do know that luxury, the premium segment is doing exceptionally well. What are the trends looking like in terms of different segments across geographies?
So very interesting. It is true is that the luxury and premium is doing very, very well. Particularly in Bombay, luxury market is doing exceptionally well. Ticket prices of more than $10 million per apartment. That's about 80 crores an apartment. In that category, it's doing phenomenally well. The affordable housing, unfortunately, as a percentage of the total sale and as a percentage of the total supply, both has come down from a pre-COVID level, which was hovering around 40% of the total supply and demand, is now down to the low 20s. I think there are 3 or 4 reasons for that. One is, clearly that the cost of construction has gone up, as a result of which, that is being passed on to the buyer, and hence the price limit, which was at about 40 lakh rupees for affordable housing, that is getting breached. The second is most of the guys are wanting bigger apartments. So prices per square feet has gone up, and they're wanting a bigger apartment, as a result of which, again, the definition of 40 lakh rupees on the affordable housing is getting breached. And the third is the repo rates and the home loans have gone up, as a result of which, it is impacting the affordability. But I must add on this one, one particular data, that the government of India is continuing to put in a ton of investment on the affordable housing. They've sanctioned nearly 1.18 crore housing units on the affordable housing, and nearly delivered 77 lakhs and given it out on the affordable housing. And, hopefully there will be another financing scheme that comes out, in the very near future. So we will see perhaps from the government side, a lot more affordable housing coming in. But clearly on the private side, because of the breach of definition in terms of the price limit of 40 lakhs, that is, creating a decline in the demand and supply on the affordable housing.
All right, so there's a decline in the demand and supply for affordable housing. However, the other verticals continue to do well. If you could give us a sense of the supply over the next couple of years, now that you're saying that there are 3 years of a cycle still ahead of us, what is the supply which is coming in the market, and at the same time, at what rate is the demand expected to grow?
So, the supply is starting to lag the demand. If you were to look at the data over the last few quarters, every quarter, the unsold inventory has been declining. And this has been right through from the sort of start of the COVID to now. Every quarter we see is that the unsold inventory declines, which means that the supply is not being able to keep pace with the demand. And that is a little bit of a worry, because if the supply is not able to meet up with with the increase in the demand, at some stage, the prices will start to run up very, very quickly. And, that may create a nervousness with the actual buyer. So I do feel is that supply, whilst it is lagging the demand, will need to, pick up very quickly. And, that is where I'm hoping that, the approval processes and other things become a lot more easier for the developers to be able to launch their new supply.
On this supply issue, I was having this discussion with one of the South-based players as well as to how there is so much supply coming in, especially in a market like Bengaluru, right? Now even Hyderabad, that one wonders whether there's any price appreciation in the longer term that one can expect or not. Is that your concern as well, that because of so much oversupply, maybe price appreciation may be hard?
Not really. I mean, on paper, I agree with you is that there is a fair amount of supply that is going to come up. But, in actual practice, it really doesn't come up to the timeline that it has been specified on paper. And that is where, I do see, whether it's Bangalore or whether it's MMR or NCR, on theoretical purposes, it does look like there is going to be a huge amount of supply, but for various reasons, that supply doesn't stack up to the timeline that it has been given. So I do not fear more supply coming in. In fact, I like if there is more supply that comes up. But the data that we have is that in theory, there will be supply that will come up, but in actual practice, it will get deferred and perhaps still continue to remain lower than the demand.
All right, when things are going so good, it's also our job to try and analyze what the risks could be. Anuj, if you could put that out for us, and if at all, would you see a downside somewhere, maybe in price or the stock price itself?
So I think a couple of places, I do see that there could be a concern. Clearly, as I said, is if there was things that were going to go wrong with the global or the Indian economy or the job market, that does have a direct impact on the real estate. Second is on the office side, whilst the demand has picked up with the global capability centers coming up, still it remains lower than what it used to be pre-COVID. So, clearly that is a segment that one would really need to, keep a view on that. And third is there are certain micro markets in cities where you can potentially have a little bit of an oversupply position that may get created and hence have an impact on the prices. But as I said, generally it looks very positive. It looks, the demand is for real. This is not an investor-led or a speculator-led demand. This is really a lot of youngsters, wanting to buy. I remember about 15 years ago, the average age of the home buyer was 47 years, and it's down to 33 years. So these are all users, actual users wanting to, hire their first residential home pretty quickly in their age.
All right, Anuj, we appreciate your thoughts. Thanks a lot for joining in and speaking about the real estate space. Let's slip into a quick break. On the other side.